Hi everyone, this is Jason Bjark of Wall Street from Main Street. I'm just going to do a short video today. If you guys remember and listened to the interview last week, I had oil expert Dan Steffens on. He is an excellent bottom-up oil picker. I disagreed with him on the direction of the oil market. He thinks it will languish around 50, mid-50s, and then go higher. I think we're actually going to see over the next couple years a very wide trading range in oil. We could see as oil as low as $30 and as high as 70. So we may see oil lower first. I want to go through the current events today and show you just how much the oil markets can change very quickly. So these are Zero Hedge stories separate. At 10 a.m. today at Zero Hedge, the oil plunge accelerated after the EIA forecast spike in April shale output. So there's been more shale oil drillers. The rig count is back up. The oil companies still have access to cheap money and credit, and they're hedging their oil production. Also, the Saudis admitted recently that they have been cheating on the oil production cuts. And when the Saudis, an hour later on Zero Hedge, there was another story where the Saudis were trying to rationalize why they were cheating on oil. Then the price surged a little bit again. But I think the overall trend could be down in the short term for the oil price because the global economy is not doing very well. The WTI price was 53 or so when I spoke to it was $50 to $53 last week when I spoke to Dan Steffens, and now it's already below 48 again on WTI, and Brent's dropping too. So there's interesting stories there, and these are why you have to be careful about following, a lot of these, like the EIA, which is the Department of Energy Information Agency, or the IEA, which is the International Energy Agency. They're saying long-term there could be a huge oil price spike inevitable, but that could be years from now. So that could be, obviously there's been hundreds of billions of dollars in CapEx cuts, but, I think the volatility for this oil price, it's going to unfortunately resemble, a Richter scale. It's going to look like one of those Richter scales going up and down and up and down. It's going to be very frustrating for a lot of people, but if you're an options trader and you trade with volatility, you can do good. If you're a long-term investor, or at least you're trying to speculate in oil and make some long positions, you want to buy on weakness. You want to buy quality companies on weakness, or you want to maybe trade options. You be contrarian with your options trades. So a long straddle or something along those lines. But, the Saudi, did you guys see the story about Saudi Aramco, how now they've opened up their books because they want to be selling a tiny stake, publicly traded, looks like in 2018 is going to be the IPO, and it looks like they're possibly overstating the reserves by 500%. So they're trying to overvalue the company to get the maximum amount of cash possible from either the Chinese government or private investors, the small sliver they're willing to sell, but it looks like they're drastically overstating the reserves. So you guys shouldn't be surprised that OPEC was cheating. I interviewed Dan Steffens last week, oil experts, and I asked him, and I was questioning him about, OPEC cheating. He was like, they've actually not cheated so far. They've done a good job. And, I was very skeptical when I heard him say that, because I knew eventually, we know this from all the past behavior with OPEC, is anytime they set a quota, almost all those guys go out and cheat. And, it was the Saudis who really wanted the quota, and the Saudis ended up cheating on it. So there's going to be more guys cheating on this. And that's this video today. Expect going forward, at least for the next couple years, because the real economy, the global economy, is not going to be good. There is longer term supply problems for a lot of oil supply outside the United States, for deep water offshore and other legacy fields like the Cantarell oil field in Mexico. These fields are depleting. However, as long as Wall Street is going and the Federal Reserve is going to allow cheap money and credit to a lot of these onshore players and investors on Wall Street, they can get non-dry holes. Because one of the biggest risks in oil is that you spend all this money in exploration, you hit dry holes. That happens a lot in deep water. You're going after the big elephant-sized oil fields, and you can hit dry holes. But on the onshore now, they're hitting less dry holes, and Wall Street's throwing a ton of money. So in the short term, there's a supply glut, at least here in the United States, although the U.S. is never going to be energy independent from because the U.S. still imports enormous amounts of oil. But there still is a short-term supply glut on the oil market right now. Long term, though, there's not a lot of investment being made but that's not affecting the oil price quite yet. So I think we're probably going to go shorter in the near term for oil. Remember how Dennis Gartman, he went long oil when about a month ago, he went long oil as a contrarian indicator because Dennis Gartman is Dennis Gartman, and the oil price has gone down since. So I expect a wide trading range. If as the petrodollar unwinds, less oil transactions are used in U.S. dollars, settled in U.S. dollars, then that could potentially move the oil price higher at one point, because there would be less demand for dollars. There would be people that would say, oh, that would make the oil price fall. But there would also be less demand for dollars, and the dollars would go flooding back to buy up assets as well. The dollars would start to go maybe into buying up real assets. So it's an interesting problem, but I think with the lack of strength in the real global economy, I think there's going to be a wide trading range in oil. If we get low enough on the oil price, we're not at an oil price right now where it's going to bankrupt a lot of firms yet. But if we go, another $10 lower, say from 48-ish down to 38, it's gonna potentially either bankrupt governments. Venezuela is already in major trouble. Okay, that's it for now. Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video, so if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations. If you go to the wallstreetformainstreet.com website, we accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.